Right, everyone, here we are with ticker symbol RKT, Rocket Companies Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Hope you guys find this video helpful and informative, and it means you well. So all my subscribers, welcome back, and let's jump into this chart. So Rocket Companies Inc. is actually in a very bearish run, and their highest point here was close to the $34 mark. 34 and some change, and we are seeing it fall from those points forward to newer lows and newer support levels being broken every time. Every time this stock has tried to recover itself through the 50-day moving average, it gets torn down once again, and here we are seeing Rocket Companies hit newer lows, and it actually has hit a new low based off of breaking through support and where it's at today. So we're going to zoom in and see what is important for Rocket Companies Inc. Now, I'm actually going to zoom out. Excuse me for that I said let's zoom in. But I want to talk about the lowest point that this stock reached before this run and as we're falling down. So the lowest point that Rocket Companies reached was 1826 when it went up, right? It rose up and it dipped. And from 1826, it started to rise, leveled off, and hit new highs. And bulls were very bullish. And $34 is the highest at its point that it reached. Now, 1836 is super important to keep in mind for the next coming days as we're getting closer to it. And we're at 2033 closing price. So I'm going to move this support and resistance level to their new locations so that we can see what is important for tomorrow. And our resistance level is not changed by much. This is the highest point before the dip, and honestly is leveling off with yesterday's point here, which was one of the highest points in the day. So there's been a resistance formed here more than once, and that goes to show you how important 2206 is for the bulls and for the stock to even have a bullish run or recovery. So 50-day moving average is 2143. Super important number. As long as we're below it, the bears are in control. The moment we break through it, the bulls are starting to gain leverage, but they won't gain control until they break through the resistance levels. So super important to keep in mind and know what side of the chart we're in. Now, we're down here at 2033. We closed off, and the bears have torn this one down further away from the 50-day moving average in a downward direction, getting it deeper into bearish territory. And the bears are going to want to break through the support, and our support level is 2020. What a coincidence. We're in the year 2020. So 2020 is our support level here. If $20.20 gets broken through, then we are on our way down to newer lows, and the bears will start to bring this one down as much as they can back to that $18 mark or even less. Their goal is to pull this further away from the 50-day moving average in a downward direction. So I want to emphasize how important it is to pay close attention to how this reacts if support is broken through and what goes on with the stock in those moments. If it breaks through 2020, how is it reacting? Put your 1 minute, 5 minute, 15-minute charts to see how this stock is doing, and are the bears tearing this one down fairly quickly to newer lows and pulling it further away from that support level, or is it slightly hanging out, and are the bulls trying to reappear to break out a recovery? Now, even though the bulls break out a recovery, they have no chance of gaining control until they break through 2143, which is the most important point right now for the bulls. That's what's going to get them over to the next step of being in bullish territory. Now, the bulls are going to actually want to break through the resistance level, though. That is what's going to guarantee them getting across the bullish territory of the 50-day moving average, but also reaching new levels and newer highs. And our resistance level here is 2206. The bulls won't only accomplish breaking through resistance, but they also broke through the 50-day moving average. And by breaking through resistance and turning it into support, the bulls can start to work their way up further away from the 50-day moving average in the upward direction. Now, for that recovery to happen, obviously the bulls need to use this support and not touch it again and start the momentum from here, or even if they hang out sideways, but start the momentum to slowly rise and come in hefty and strong to break through the 50-day moving average and start to aim towards the first resistance level across the bullish territory, and that is 2206. The bulls need to break through it, turn it into support, so this can start to work its way up to newer highs and new resistance levels. By doing that, they will pull themselves further away from the 50-day moving average of 2143 in an upward direction. For anybody that feels encouraged or inclined to subscribe, please do so, but don't forget to click on the bell. By clicking on the bell, you turn on all notifications and you won't miss a single video that I post. You'll be up to date on every single chart analysis, and share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And at the end of this video, there's going to be a pop-up video, and I want to speak briefly about it. In that video, I talk about the strategy that has worked for me while the market's been going up since March, right? All the way till present. And even as it slowly started to fall down, because I talk about the dates that the Federal Reserve is pumping the market and it's benefiting certain American companies. And I use the S&P 500 as a form of analysis because usually, according to when that date comes, the S&P reacts in a green day or a recovery day from the lows that it reached, and it kind of levels off, or it starts to bring up the S&P slowly but surely to newer highs. And in the S&P, there's 500 companies. There's 500 ticker symbols to choose from. Obviously, you need to do your own due diligence and research. I'm not here to tell you to buy, hold, or sell. I'm just here to enlighten every single investor and viewer on some great information that many people are overlooking or not well informed on, because not many people are talking about it. But it's something to definitely be able to maximize profits and minimize losses. I mean, I make 30 cents to $2 per share. I know it doesn't sound like a lot, but gains are gains. And that's the point of the video, to encourage you guys to check it out, do your rational decisions based off of your research and due diligence. And honestly, the best advice I can give anybody is look for charts in the S&P 500 companies, right? Find one of those companies individually, look at their chart side by side with the S&P, and on the dates of the pumps, check out how those other ticker symbols did according to how the S&P reacted. And you can kind of get a correlative distinction between the two, and you'll be able to make your own decision if that's a company you want to invest in. Now, like I said, you have to do your research and your own due diligence, but by clicking on that video, I inform you guys with more information in regards to that and the specific dates and what's going on. It's a weekly series that I'm doing, so don't miss out on that video and that information. Click on the video if it hasn't popped up already. It should be popping up soon. And thank you guys so much for watching, and let's make some money.